What is the Bank Secrecy Act? The Bank Secrecy Act, BSA, also known as the Currency and Foreign Transactions Reporting Act, was passed in 1970 to prevent financial institutions from being used as money laundering tools by criminals. It requires financial institutions to keep a record of suspicious cash transactions exceeding $10,000 and to assist the government with investigating any suspicious activity that may signify that an account is being used for money laundering, tax evasion, funding terrorists, or other criminal activities. The BSA is sometimes called the Anti-Money Law, AML, or BSA/AML. The BSA is essential in the government's fight against money laundering and other financial crimes. The law does not require financial institutions to document transactions exceeding $10,000. Still, they must do so in a situation where they perceive an account is being used for irregular activities. The BSA requires banks to submit 5 types of reports. First is the Suspicious Activity Report, SAR, which is a document used by financial institutions to report any activity that hints at foul play or corruption. The SAR is not an accusation, and the owner of an account is not notified when an SAR is filed. It's just a way for banks to alert law enforcement to irregular activity on an account. Next is the Currency Transaction Report, CTR, which reports cash transactions exceeding $10,000 in one business day. The banks file a CTR with the Financial Crimes Enforcement Network, FinCEN. The body is charged of enforcing the BSA. Multiple CTRs filed on a single account may indicate that the account is being used for criminal activities. Next is the Foreign Bank Account Report, FBAR. The BSA requires that all U.S. citizens and residents who have foreign bank accounts holding an aggregate sum of $10,000 must file the FBAR with the U.S. Treasury by October 15th each year. The BSA also mandates all businesses, companies, associations, trusts, or individuals to file Form 8300 if they receive more than $10,000 in cash from one business transaction. The $10,000 cash inflow can be a result of one transaction or 2 or more related transactions, but Form 8300 must be filed by the 15th day after the transaction. The rule covers all transactions in the U.S. or U.S. territories. The BSA provides parties who are exempted from this rule, including government departments or agencies or companies listed on major North American exchanges. The Currency and Monetary Instrument Report, CMIR, is another form that must be filed by each individual or institution involved in the transportation of currency. Traveler's checks, or any other monetary instrument that amounts to $10,000 in and out of the U.S. The CMIR is also known as the Form 105 report. Other forms banks are required to file are the MIL for cash purchases of monetary instruments valued between $3,000 and $10,000 and the designation of exempt person, also known as Form 110. The BSA prescribes penalties for individuals and financial institutions that do not file CTRs, MILs, or SARs at the right time. It also stipulates penalties for banks who inform their clients that they have filed an SAR against them. The Office of the Comptroller of Currency, OCC, routinely inspects banks, federal savings associations, and other financial institutions for compliance with the BSA. The BSA has faced many criticisms over the years, especially for the burden on financial institutions of collecting, producing, and maintaining the vast amount of data required by the BSA. Another criticism the BSA has faced is that the law is unconstitutional and violates the Fourth Amendment right against unlawful search and seizure and the Fifth Amendment right to due process. However, the Supreme Court has upheld the constitutionality of the act. We hope you learned something new in this video. Please hit the like and subscribe buttons below and share this video. If there's a topic you'd like us to discuss, let us know by leaving a comment below.